Good day everyone, this is Patrick from EasyFX Code Training System, and it is Saturday the 4th of December 2021. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of December. Let's begin with the Euro. And I have changed the color combination slightly so that the background is easier to see the monthly and weekly pivots. And for this new month of December, the monthly pivot has dropped lower and it is at 113.80. And last week's weekly pivot is at 112.75. And the price basically was captured in between these two pivots, although it did spike through lower on the Tuesday. That was the widest range on Tuesday with Fed Chair Powell's testimony to the Senate. And after that, it has been consolidating within that range even until the non-farm payroll on Friday. So it did hit the monthly pivot actually did align with our resistance zone, which we had also marked here as the swing high area. So this is a valid support zone. That's just it's below the 114. It did dip lower to 112.35 on Tuesday, but then managed to climb back up. And on Friday, even with well, let me start with Tuesday's Fed Chair Powell's testimony, where he did make some hawkish comments, which is unusual, and especially it's just testimony to the Senate, where he did highlight that it could reduce or increase the pace of the tapering to complete by mid next year, mid 2022, and also possibly pull in the interest rate hike earlier as well. So that gave a boost to the US dollar initially. So the euro did dip lower, spiked through lower, but then recovered and managed to close a bullish day. But after that, it started drifting lower as well. And then on Friday, non-farm payroll day, the news was not as good as expected. The jobs added was lower than expected, although the unemployment rate did improve significantly. So it was slightly worse off, but then the euro didn't take advantage fully and only closed at a spinning top on Friday. So for the week, let's take a look at the weekly time frame, and it also closed almost as a doji after the previous week's long-legged doji hammer-like candle. So it's unable to break through that resistance zone we highlighted, and it's quite typical of euro with more consolidation after big moves. There was a previous bearish move, and just consolidating after that, the slight recovery. So it's climbed back to settle around the 138 fib extension area. It did not fall lower below the 112. That was the previous week, and a key support zone here at the 162 fib. just recap where this swing low was, and that's a swing low at 111.68. Okay, so that's a major swing low area that here it has not come down to retest yet. Okay, let's take a quick look at the US dollar index for last week. And it did dip lower, and that was right into our support zone. Managed to recover and climb back up to the 162 FIB area again. So that's the resistance zone that we were anticipating, and it's basically consolidating inside there between 138 and 162. It's in a fairly narrow range here. The wide range candle here with the bearish close, that was on Tuesday with Powell's testimony, where initially, if you take a look at the time frame, initially it did climb up higher, gave it a boost to the US dollar, but then it retraced the move down, back down, and then slowly climbed up again. So that was this Tuesday night move. Okay, so it's you can see it consolidating in this triangle here now. And it needs to eventually break out one way or the other. Okay. Let's move back to the euro. And we can also mark a consolidation area here as well within this range. So this is about a 130 pip zone that it needs to break out from. Okay, this week there's also very light news for all the major currencies and economies, with just a lot of economic sentiments for the Eurozone and the German ZEW. Let's move on to the cable, where we find that it is slightly more weaker than the euro, and it has slipped lower on the Friday, even though with the slightly weaker than expected NFP figures. So it fell from 133 and almost hit the 132 area, which it did test on the Tuesday. So this support zone has been breached. It did not come close to the resistance zone, and the new monthly pivot is also aligned closely with the 134 area, 134.00, and move this. The weekly pivot is aligned with this swing low area. Swing low is this weekly pivot last week was 133.55. So you can see all these wicks, upper wicks here being blocked by the weekly pivot. Rejected there. And eventually Friday, it did dip lower past the 138 fib. Trying to reach the 132. 162 fib of this reversal fib move is at 131.51. So that's going to be our next key support zone. Let's mark this here. And this interim support now, or this support zone now, could turn into resistance at this 138 fib. So for now, we can identify this as a resistance zone. Perhaps lower this resistance zone to 133. Okay. So it is turning weaker. Let's take a look at the weekly time frame, and you see that after falling below the weekly 200 EMA the previous week, has continued to nudge lower, and only on the Friday then it fell towards the 132. So it's still a bearish candle here. So this reversal move is still in play. So that's why that 162 fib target should be the next support area. Okay, let's go back to the daily time frame. So only minor news with UK GDP figure on Friday, and nothing much going on for this coming week. All right, let's head on to the Aussie. Aussie dollar was the or is the weakest among all the three, and it has fallen hard on the Friday, especially almost 100 pip drop there, right to the 70 round figure. That's the key support zone here, and it closed below that at 97. So this is a critical support zone. It could try to rebound and recover slightly, but otherwise the next target of this reversal move is at the 162 fib at 69.32. So that's going to be critical support zone. And we can move this resistance lower to the 71.00. And you can see for last week, it did test the weekly pivot, which aligned with the swing low, this 100 fib. That was at 71.69. Fib is at 71.70. Did test it, rejected, and then the next day, again, Wednesday, it tested it again and again rejected. And eventually fell hard on the Friday. And the new monthly pivot now is also at 0.7242. It has been drifting lower as well. So the Aussie was the weakest among all these three major pairs, and this coming week, Tuesday is a critical one for the Australian economy, with the RBA having a meeting and the rate decision. So that's going to be a key driver. Now there is fallen lower. Let's also take a look at the past. That was the support previously at the end of last year. Critical support at the 70.00. You'll have to go to the weekly time frame to find and see where the next key support is going to be, and looks like it's at this swing low area here, and that's at 0.6800, where the 200 pip extension is at 67.85. So that's for the extension of this bearish move if it does break through the 162 pip. That's a critical break of 70 if it does not hold, if it does not rebound. Find support next week. So the RBA news will be a critical one. So let's just identify this as a major support zone here at the 200 pip and 68.00. Okay. Future reference. All right, so do check out my other videos on the spot gold and dollar yen, and have a safe week and a good trading week. And cheers for now.